December 2022 Las Vegas Real Estate Report. My name is Jan O'Brien, and I am a co-team leader with my partner Cosmo Morabbi, and this is our amazing team of local area experts here to serve all your Las Vegas and surrounding area real estate needs. Here's what we're going to talk about in the month of November: housing stats, Las Vegas area housing stats. We're going to compare it to 4 areas around the valley. We're going to talk about what's happening with mortgage rates and what's projected to happen. Key national housing stats, specifically inventory and what's predicted to happen with home prices. And then I want to discuss opportunities for buyers and sellers, or maybe you're thinking of selling and buying. So let's dive in. So since May, we've seen the peak of median sales price in Las Vegas at $482,000, as this chart shows, and we have been declining ever since. This is also when the interest rates moved and went above 6% and even climbed to 7%. More on that when I cover rates. But we have seen the median sales price for single family homes in the valley consistently go down, pretty much going to be erasing the gains that happened in appreciation for the year 2022. You can see we're already below where we started in January at 435. So the median in November was 439.90. That is about 2.6% year over year appreciation. We're projecting that when we get the numbers for December, we may be at 0 appreciation, if not a little negative. December 2021, the median sales price in Las Vegas was $425, 10,000 below where it was in January. That's where we're projecting, right at that, or maybe even a little lower, is where we'll end the year for 2022. What else is happening? Well, the available inventory is higher than it was year over year, 7,342. Well, let's compare that to 1821 just in the beginning of January. It peaked up here around 8,100. And that's available single family homes at the end of the month reporting, which was in this month, August. But it's already, or actually that was September, it's already sliding down a little bit. So we're seeing less people put their homes on the market. There is obviously less buyer demand, and people are being picky and choosy about what they want to purchase. Okay, so they're looking for properties that are in better shape. Sidebar here on cash sales, about 28. That's been consistent throughout the year, right around 25 to 28, 29% of the market is cash sales. All right, let's take a trip around the valley. So if we are 439.90. Let's look at Summerlin, 595,000 was a median sales price. That has been consistently coming down in Summerlin as well. That's a negative 3.78% year over year appreciation. 99 units sold, that's telling the story here. That's 112% less sales than this time last year in November. In Inspirada, the median sales price, but there was only 15 units sold, down 126%, but that median sales price was $690. If we look at Silverado Ranch, which is right over in this triangular area, we're really kind of looking at a little bit outside of Silverado Ranch. That median sales price was up 10% year over year, 470,000 with 49 units sold, which is 128% less sales than we had in November of 2021. And then out in Pahrump, 366 was the median sales price. That's up 6% year over year. The unit sold was down 50%, new listings down 20%. So here's another way to look at how, just a graphical representation of how we peaked out here in May at 482, and then we had a slight adjustment in June, and then it dropped quite significantly in July. And that's because the interest rates changed here in May, end of May, beginning of June, and it takes a little bit for the market to catch up. And that's what we started to see here in July and August, 2 months in a row at 450, then 444, and now we're at 439.90. And we're projecting that December will be at it'll be definitely 425 or lower. So this is just another way to look at this. I like looking at this because this is like really pre-pandemic right here. And then about March of 2020, actually, if we kind of come forward a little bit here, you can see that sale prices started to go up here, and then they drastically went up all the way through 2021 and into half of 2022. So this curve really just graphically shows that we're making this correction back. Now, in a healthy market, actually the next chart will show this great. Here is since 2012, The median sales price here in Las Vegas. Yes, if you bought a house back here in 2012, the median sales price was 149,000. And you can see this steady, healthy appreciation, a little bit of a jump here in 2017. And then we went from 2019 to 2020, which was the part of the pandemic. We went from 313 to 345. Then this massive equity gain happened in between 2020 and 2021. That's when we gained 80,000 median equity in the valley. And that has been basically erased, right? So if we take a look at where we are with 1 month to go, we're probably going to erase that and see zero to, if not negative, just year over year, looking at year over year. But this really puts it in perspective, especially if you've been in the valley a while. You still have a lot of equity in your homes, which is why I'll talk about foreclosures and distressed sales in a moment. And this is one of the reasons why we're not going to see a huge increase in those. That is simply because of the equity position most people have. So what about rates? That's what's keeping everybody on the sidelines. This actually is a great representation to show this was back in January. So it's just a 1 year. The rates, continue to go up. Here's where we can really see. I'm talking May and June. This is when they went over 6 right here. Right at the end of May into June, there was a lot of fluctuation. And then we've had this climb where it went up to, I think, 7.37. This is as reported by Mortgage News Daily, which is a daily survey of lenders around the country. Right up in here, we're at 7.37. And as of this recording, December 15th, the rate today was 6.13. And this chart can show the fluctuations, which happens, interestingly enough, a lot of people think the Fed changing the rates moves the mortgage rates, and that is not true. They already built those moves in because the Fed's very clear about what they're doing. The interest rates are moving based on what's happening with mortgage-backed securities, the 10-year Treasury, and other things that are happening in the economy and the markets. And so you can see that volatility. This is daily rate changes, just since November. Up here around 661 in the 6.6s to where we are today at 6.13. Now, where are they going to go? It's all about inflation, and which looks like the Fed has indicated since they just announced it yesterday. When they announced it yesterday, the rates actually went down a little bit. And then because of the bond market activity today and mortgage-backed securities, it went down even a little further, 6.13. But where are we going? Well, the experts all feel it depends on what happens with inflation. Do we continue to get great news with that? Is it mixed reviews? Is it going to stay in the 6s or get back into the 5s? General consensus is by mid-year, maybe second quarter, we could see the rates back in the 5s, maybe even below the 5s. We shall wait and see. Short sales and foreclosures were just 0.5% of all sales in November. And this chart that comes from CoreLogic is excellent. It's showing 10 large metro areas and the reality of negative equity. And it's pointing out Las Vegas is the least challenged with negative equity share of all mortgages at 0.7%. And that's simply because we saw such great appreciation during the pandemic. And so did a lot of the Western states. So those are the states that are correcting right now as people sit on the sidelines and high interest rates. So it's going to take quite a bit of things to happen to create a lot of distressed properties. We hear this all the time. I'm going to wait till there's a lot of foreclosures. Well, it might be a long wait. There's a lot of equity. It would require some major challenges in the economy with people losing their jobs, getting behind in payments. But even if right now people were to do that and get behind in payments, there's always going to be some. 0.5% of all sales in November were short sales or foreclosures. There's always going to be some, but it's not going to be high anytime soon because pretty much people could sell their home if they have to before letting it go to foreclosure for the most part, unless they recently purchased in the last year or so, then those folks could have some negative equity situations pretty quick. All right, so the average equity gain in Q3 around the country was about 40,000 for right here for Nevada, but you can see that we've made those adjustments. We're making those adjustments downward if I just compare it year over year. And you can get a sense of what's happening in the rest part of the country. Florida has one of the highest equity gain year over year. And then we're in one of the solid average equity gains. Now, national housing and right here in Las Vegas, this is the reality. inventory is still low. Yes, it's not as low as it was, and that's what created the ridiculously increasing prices that we had last year because of low interest rates in the sub, threes, and a high buyer demand and no inventory. That set the perfect storm to create all this equity for people around the country. And really, particularly, we saw quite a bit of it here in Vegas. But if we go compare the same week in 2021, we now have 58% more inventory. This is just a national chart, and it's very much in alignment with where we're at in Vegas. And then the same week, this is for the week ending December 9th, in 2020, it's still 14%, only 14% more. Then we have to go back pre-pandemic to see that we are negative 34.8% equity for what we had in December, the week ending December 9th in 2019. That's pretty significant. That's how much lower inventory we had, and is what's causing a lot of the challenges still in the market. All right, what are the buyer opportunities? Well, definitely more inventory compared to last year and compared to the beginning of this year. And there's less competition because the interest rates have popped up and they're up in the sixes now, low sixes, 6.13 today. There's less people buying. What that lets us do as your real estate professionals, and what we've been consistently doing in the last 4 or 5 months, is negotiating better deals for our buyers. And that means better prices, seller concessions, whether it's resale or new homes, getting your interest rate bought down. We are looking at a lot of new homes. The builders have major incentives going on right now. I've never seen in 30 years of practice builders move their price points down like they have in this past 6 months. And that we just had another round of price reductions with a lot of the builders. So they've reduced their prices. They're trying to move their inventory or what they have under construction because they're facing the same challenges everyone is, with less buyers in the market, interest rates higher. So they're offering things like 4.75% interest, buying your 2-1 buy downs, paying your closing costs, and resale sellers we can also negotiate those kind of savings for you as well. Now, a lot of people are telling us we're going to wait for the prices to come down lower and for the interest rates to get down. And I personally feel there's a great time to buy in these next few months until that happens, because if and when that happens, everybody's going to jump back into the market, right? If most people are sitting on the sidelines, when those events line up, the stars align and the prices have come down and the interest rates have come down, people are going to jump back into the market, including investors, which means there'll be more competition again. So it just depends on your personal situation, but there's definitely buyer opportunities. But there are also seller opportunities. Many sellers didn't sell in this past year, last year, the first part of this year, because they didn't have any inventory. They didn't have anything to go purchase. Sure, maybe they could get a higher price on their home 6 months ago than they can right now. But in perspective, unless they bought the house a few months ago or at the beginning of the year, there is a massive equity gain that was realized since the end of 2020, really into all of 2021. Price appreciation may continue to decelerate. That's what we're seeing right now. So if you've been thinking of selling and you're in the Las Vegas area, you might want to take advantage of getting your home on the market and getting the best dollar that you can get right now and be competitive. And if you're turning around and buying, then you can put that buyer hat on and just do exactly what I just said, which is negotiate a better deal and maybe make up that equity loss, because you're going to now have opportunities to purchase something and maybe get buy your interest rate down and so on. So give us a call, contact anybody on our team. We can talk to you about the different options for buying and selling right now. There's options out there with builders. There's just quite a bit of different things to look at, and it's all on an individual basis. So once again, this is our team of experts. Reach out to any of us. We're here to help you throughout the entire valley. We have somebody covering all parts of the valley. And until next time, you can follow us over on YouTube, Living Las Vegas and Henderson. We're on TikTok at Living Las Vegas and on Instagram. Until next month, Happy New Year. We will, in January, second week of January, we will give you that report on the whole look on what happened in 2022.